Okay, good morning, everyone. We have people popping on and joining as we speak, so we're going to give them just another minute or two before we get started. I hope everyone's going to have a lovely weekend here in Texas. Our weather went from sunny and 75 yesterday to cold and rainy and 32 degrees today. Gotta love Texas weather. Okay, I think we're about ready to go. So again, good morning, everyone. My name is Kelly Bufink, and I would like to welcome you to Strip Matter Wealth Smart Money webinar series. Thank you for joining us today. Our presentation today is titled Extended Care and Long-Term Planning Care. For those of you that don't know us, we are Strip Matter Wealth Management Group, which is a registered independent advisor located in downtown Fort Worth, Texas. We specialize in investment management, financial planning, estate planning, and real estate investing. We've been in business since 2007 and serve clients throughout the United States. So a little bit of housekeeping before we get started. All of you have access to the chat feature. So if you have any questions, please don't hesitate to type those questions in and we'll be happy to answer those for you. Also, we'll be sending out a replay of today's webinar via email. So if you missed something, don't panic. You'll have the ability to go back and watch this again. And you are welcome to also forward these presentations to any of your friends or family if you think that will be beneficial. Actually, any of our presentations we do, feel free to share those with friends and family. Now, today's webinar is meant to be purely educational, and it's not meant to be any tax or legal advice. So you'll want to talk to your licensed professional before taking action on any of the information in this presentation. And for more information, including key disclosures, please visit our website at stripmatterwealth.com. So let me introduce our speaker today. Susan Carlson is an external long-term care wholesaler for Crump Life Insurance Services and is responsible for growing and maintaining long-term care business for independent producers. In her role, she manages existing producer relationships, builds new relationships through referrals and marketing initiatives. Susan resides in Phoenix, Arizona with her daughter Ava and their many family pets. So without further ado, I am going to hand it over to Susan.
Great. All right. Well, thank you. And welcome, everyone. I'm actually in Phoenix, and we're having a little bit of a cool down. So I think our high is supposed to be 70 today. So that's definitely boot and scarf weather temperatures for us. But so today, what I really my goal today is really to provide education of what long-term care really is versus what we perceive it to be, who pays for this type of care, and what type of insurance products are out in the marketplace that can help cover a portion or all of the costs. So again, it's purely meant, just education, what's out there. I'm going to wait until the end to answer any questions, but during the presentation, please make sure you type them in so that way we can make sure to answer everything at the end of the session. So what my role is I work with financial advisors nationwide and more in an educational role where I educate exactly what we're going to talk about today, what long-term care really is and who pays for it, and also what type of insurance policies are available. But I always like to start my presentations with this quote from Rosalind Carter, because it's absolutely true that every single one of us in one way or another is going to be affected by somebody that we know needing care for an extended period of time. whether we are that person or we're the ones that are providing the care for the loved one. So when we talk about long-term care planning, we're not talking about whether or not you're going to need care. What we're going to talk about is if you did need care for an extended period of time, how is that going to affect your family? So the whole reason we put together a plan really isn't so much for ourselves, but it's for our loved ones. And my why, why is it that I do what I do and why I've done it for so long always comes down to personal experience. And the experience that I had really was watching it more as a child as to what happened. And long story short, my grandmother was diagnosed with Alzheimer's. Now, at the time, my family is from back east, or from the Philadelphia area, but we happen to live in Arizona. So when my grandmother was diagnosed, my aunt and uncle thought, okay, well, we're going to share the caretaking duties and help, take care of my grandmother. Well, it got to a point, as it always does, that it was becoming dangerous. My grandmom started burning things on the stove. So she moved in with my aunt. Well, my aunt, of course, had 3 kids of her own, was married. So doing all of that juggling. And then it got to the point where my grandmother, they needed to put her into a nursing home where she spent the remainder of her life and passed away. So how this affected me isn't so much that my grandmother, spent all of her inheritance. Again, we're in Arizona, so we're not really too involved. But my aunt and uncle, and this happened, oh my goodness, over 20 years ago, still do not speak to each other today. And that's because they felt, or, one of them felt that the other one wasn't pitching in, they weren't helping, and it literally ripped our family in half. So when we go back to visit, my mom and I, we always stay at my aunt's house, but if we want to see my uncle, we either have to wait outside of my aunt's house for him to pick us up or go to the Cherry Hill Mall and meet him there. So when I approach long-term care planning, I don't really approach it so much from the monetary issues, but instead the dynamics of the family. Because if we don't have a plan in place, there's a very good chance that 2 of your children may never speak to each other again because of the tension of providing care for a parent. So we're going to just talk about what long-term care is, the types of care that's available, who pays for this care, and again, the types of insurance products that are available to help offset some of this cost. So when I say the words long-term care, we automatically think an end-of-life event and something that's going to happen to me when I'm older. And that really can't be farther away from what the definition really is. So what the definition is it's either physically based or it's cognitively based. So if I need help with what we call our activities of daily living, and think of what you did this morning to get ready, ready for our day. That's how I remember them. We all got in and out of bed. We were able to wait and use the restroom on our own. We were able to get a shower, get dressed, and have breakfast. If I'm in a car accident and I'm injured in such a way that I can't get in and out of the shower without somebody's help and get dressed on my own, and the doctor said, Susan, it's going to take you at least 3 months to get back on your feet, I need long-term care. So instead of thinking of it as an end-of-life event, I just think of it needing care for 3 months or longer. It's not something that is going to affect me for the rest of my life. I could need long-term care several times during my life because it's something, again, that I can get better. So it's not necessarily an end-of-life event. And again, it's either physically or cognitive, like with my grandmom, with the dementia and the Alzheimer's. So it's an either or. And it's also care that's what's called custodial. It's not skilled care. You know, our health insurance pays for doctor care, for nurse care. Long-term care isn't that. I don't need to have a nurse come to my home to help me get in and out of the shower, get dressed, and to live independently. That's called custodial care. And most of our health insurance do not cover any type of custodial care. So what types of care are available? Again, what do you automatically think of when you hear the word long-term care? You think of nursing home. Nursing homes, now that we have so many other types of options available for care, nursing homes really are an oh, by the way. If you have to go into a facility, this plan will help offset those costs as well. So nursing homes, you know, in the past, it was either home care or nursing home. Now we have assisted living, we have group homes, we have all of these other options. So when we're talking about planning, we're going to think of care at home, who's going to provide that care when you need care, and then we're going to think of assisted living and group homes. Nursing homes, again, if we have to go there, it's normally just the very end of our life, but this isn't what we're going to plan for. We're going to plan on where care really is happening. And again, that's at home. Home care, you know, I'll get a lot of questions of, well, what's the average length of time somebody needs care? And, you know, I read all these statistics, but there's no way that we can measure how long a family took care of a loved one. Okay, so like with my grandmom, my aunt and uncle, well, it really ended up being my aunt, took care of my grandmom for 3 years before she moved into her home. And then, you know, by the time they put her in the facility, I think she lived in the facility for just 2 years before she passed. So all of that time beforehand, we couldn't, you can't measure that. So when you look at these averages, just, you know, I just kind of take them with a grain of salt, because the averages are for the length of time in a nursing home. And again, we're not going there like we used to. So what is the impact of providing care? So if we don't have a plan, basically what we're doing is we're forcing our spouse or our partner to become a caregiver, whether they want to or not, and more than likely our children as well. So when you think of having to provide care, you know, a lot of us will say, oh yeah, of course I'll take care of you. You know, I used to say that to my mom before I really understood what that meant. So just the increased stress of, you know, trying to balance your life and then taking care of a parent, the sibling tension, again, there's a good chance that 2 of your children may never speak to each other again because of, you know, just the tension of who's providing that care, who's providing advice of what that one sibling should be doing. Then we have the decline in well-being. It's a proven fact that caregivers, their health deteriorates faster than the person that they're taking care of. And then if you are a working family, 2 income, and you know, we have an in-law move in, you know, is that person going to have to quit their job? Is your child going to have to quit their job in order to provide that care? And again, is that what we really want? Do we want our loved ones to become a 24-hour caregiver? And then the financial considerations, you know, I hear so much of, oh, well, we can afford it. Well, that very well may be so, but we got to think of everything that's involved in self-funding our care. One, we have the tax implications, meaning if I have to start cashing in or dipping into my retirement portfolio, how is that going to affect me tax-wise? Is that going to push me in another tax bracket? Am I going to have surrender fees, penalties for having to liquidate a part of my portfolio? And heaven forbid, what if the market is down when I need to start pulling out from my portfolio to take care of, to pay for these additional expenses? Liquidity. A lot of our portfolios are tied up. I can't just go and liquidate. Maybe I have real estate or bonds, things that I can't get to immediately. And then, of course, the loss of the future income. When I start pulling away on those assets, that is going to affect that the income, those assets were set in place to provide for my spouse or for us to live on. So rather than looking at your assets, look at your income. Can you take 6,000, 7,000 of that income per month to provide or to help cover care if one of you need care? So by putting in a plan, what we're doing is we're really we're protecting that income or providing another source of income to pay for these additional expenses that we might not have considered during our financial plan. So thinking about if you needed care today, what is important to you? What is it that you want to protect? What is it that you've put into place that you want to see remains in place? Maybe it's gifting to charity. Maybe it's your grandchildren's college. Again, what is it that's important to you and that you want to protect? So when I look at who pays for coverage, there's all different ways, but nothing is really set up to provide long-term care. So Medicare is designed for acute care. It's designed for skilled care. Long-term care is just the opposite. Remember, I said it's more custodial. I don't have to have a nurse or a doctor. Medicare in your health insurance doesn't cover custodial care. If by chance you were in a hospital for 3 entire days, remember, my grandmother, she didn't spend a day in a hospital with Alzheimer's, but let's say you did. And then you went immediately to a Medicare-approved nursing home, Medicare will cover the first 20 days. After that, and I apologize, this should say $195.50, but the next 80 days, you have a copay of $195, and then Medicare mixes up the difference. And then after the 100th day, everything stops. Now let's go back to what the definition of long-term care is. It's a condition that's expected to last 90 days or longer, meaning Medicare isn't going to cover it. So by no means do not plan on Medicare covering a dime of your extended care. If it does cover anything, we'll just consider it a bonus, but we're not going to plan on this program to cover something that it was never designed to cover. Now, Medicaid, this is what, with my grandmother, what happened. So naturally, because her care was so long with the Alzheimer's, she used up all of her savings and ran out of money. So then what happened at that point is that the state then comes in and covers your long-term care bills. And this is a great program for somebody that maybe has a lower net worth, meaning that, we have less than $1 million in retirement, or maybe we're not in a position financially to set up some type of long-term care plan. But Medicaid, again, it's designed for when you run out of money. And what I look at here is if you are married or if you have a partner and you need care and you're using up all of your retirement savings, how is that going to affect your loved one? Because with Medicaid, you have to spend your pension, your Social Security, your life insurance, your 401k. Everything has to be spent down before the state will come in and cover those bills. So for a lot of us, this really is not an option. Now, the VA has benefits as well, But the VA, there's a lot of ins and outs to that. With the VA, it doesn't matter how long you served. What they look at is it depends on how severely or how much you need care. And then, of course, you have to use their facilities. And it really is in line with Medicaid, meaning this program is designed to cover more for when you go into a nursing home. Occasionally, you can get home care benefits, but again, they're really positioned as for nursing home care, which is the last place that any of us want to go to. So a majority of the time, what happens is we pay out of pocket, something that we didn't plan for whatever reason, and we end up paying dollar for dollar. So going back to my mom's story with my aunt and uncle, I bought my parents a long-term care policy, and I pay for it still. And it really was it's more of a selfish buy. It's not, I didn't buy it so much for my mom, I bought it for me, knowing that there's no way I could be a caregiver. And it's just, one, it's not in my blood. And two, I'm a single mom. And, I couldn't take time off of work. And I would rather be someone that manages her care. I mean, I can help whenever I can, but I can also maintain my own life. And I'm not going to have that resentment that a lot of caregivers have when they're forced into taking care of someone. So again, I pay, my dad has since passed away, but I pay my mom's premium every single month. And knowing, again, that it's really there to protect myself and to protect my daughter, protect meaning that we can still have a life outside of, being a caregiver. So when you're looking at and you're planning, now insurance is not your long-term care plan. Insurance, if you choose to go down that route, is what pays for the plan. So it's important that you have a conversation of when we need care for an extended period of time, where is the money going to come from to pay for that care? Is it going to come from our stocks and bonds? Do I have life insurance maybe that I could use some cash value, annuities? Do I have qualified money? Where is that money going to come from to pay for that care? So long-term care planning can actually be the anti-nursing home planning because, again, by having something put in place, it can help keep us at home and not have to rely on some of the government programs that will only pay when we go into a nursing home. So let's talk about the different types of insurance policies that are out there. And we're going to do a very big picture of what these policies are and how they work. If you'd like more information of what do the premiums look like? What would it look like for me? That's when I would encourage you to reach back out to Josh's team, set up an appointment and go through, because there's no perfect insurance policy out there that fits everybody. And I have seen where couples have done different, where the husband has one type of solution and the wife has another, again, depending on their needs and wants. But let's talk about the purest form of coverage out there, and that is long-term care insurance. This is what I bought for my mom and dad, and this is what I have personally. And it really is health insurance, meaning you pay the premium forever or until you start to receive benefits. I don't get anything back if I don't use it. So like my dad, he died of a heart attack 3 years ago. I was paying his premium, all those years. I didn't get any kind of refund because he didn't need long-term care. And also the premiums are not guaranteed. So just like health insurance, they can go up. But because of those two factors, this policy has the lowest premium out of the different options we're going to look at. And at the time, this is what I could afford. So these policies are designed to cover for care at home, so that custodial care, home care aides. It will also provide coverage for group homes or assisted living, and then it will also provide coverage for nursing homes. So since my dad has passed, my mom is thinking of, selling the house and moving into an independent living facility. The policy I bought her is not going to pay for that because she doesn't need care. It's kind of like just moving into an apartment, if you will. But what's nice is on that property, if she does need care, then, she can receive home care in her apartment. The policy would cover that. And then if she needs to move into, say, an assisted living, they have a facility like that on the property, and they also have a memory care. So she would just make one move and then, be able to have all different types of care on the property. But in order to receive benefits from an insurance policy, remember the definition that I need assistance with 2 out of 6 of those activities of daily living for 90 days or longer. So that car accident that the doctor said, Susan, it's going to take you at least 6 months to get back on your feet, then I would be eligible to receive home care, or I'd be eligible to receive benefits to help pay for the home care I have to hire to come in and help me. Or like with my mom, if she's diagnosed with dementia or Alzheimer's, where she cannot live alone anymore, the policy would, pay out benefits in that case. So again, these are just like health insurance policies, but they're designed to cover long-term care expenses. If you have an HSA, if you're still working, you can actually use some of your HSA monies to help offset that premium. If you are a business owner, even if you're a sole proprietor, there is the ability to write some of the premium off as a health insurance premium. Okay, so these are the most flexible. They're, and we'll talk a little bit about how they're designed. But again, they're not guaranteed, meaning the premiums can go up. I don't get anything back if I don't need it, but it's the lowest premium. Then we have what's called hybrids, which is 2 types of insurance put into one. So I have a traditional long-term care policy on a life insurance chassis. Now, the only reason there's life insurance in this product is to provide guarantees, meaning the premiums are guaranteed to never increase. And if I don't need long-term care, my family would get all of the premium back in the form of a death benefit. So naturally, because these are guaranteed, they're going to be 3 to 4 times higher than traditional long-term care, but you're guaranteed to get the money back one way or another, whether it's an LTC benefits or your family gets it back in a death benefit. Then we have life insurance with a rider. This is if you have a need for death benefit, or if you have a need for life insurance, that's your primary need, you can add a rider to it that if you do need long-term care, the company will pay out all or a portion of the death benefit while you're still alive to help offset those costs. And then we also have on this hybrid long-term care, instead of a life insurance chassis, it can be on an annuity chassis. So 3 different options, and how I help the advisors I work with is I ask them, tell me, what is the primary concern of the client? Is it death benefit? Is it long-term care? Or is it maybe building a guaranteed income, using some type of an annuity? And if they tell me it's long-term care, then we're going to look at solutions that were designed to cover long-term care. Now, how the policies are designed, really there's 3 components, and this applies to the hybrid products as well. You have how much do you want the policy to reimburse you when you need care? The costs that we look at reimbursing are home health care or assisted living. We don't try to build a plan that would cover nursing home expenses because one, you might not ever go there, and two, those costs are just astronomical and it would make the solution unaffordable. And we want you to have something because something is better than nothing. So you have how much, then you have how long. How long do you want the policy to pay out once you need benefits? And then how soon? What type of deductible would you like? The deductible with long-term care is measured in days, not dollars. And the most common is a 90-day deductible, meaning you pay for the first 3 months of care, and then the insurance company will pay the rest, or will pay thereafter until the policy runs out. How much, how long, and how soon? These benefits, these are more associated with traditional long-term care where they have a care coordinator. So if my mom was starting to show signs of Alzheimer's, her doctor said, Susan, I think it's time, that we need to do something about your mom. I would call the insurance company that I have her policy with and say, I think my mom needs to go on claim. I can choose. I can have her doctor write up a plan of care, or I could have a care coordinator come out to the home. I would rather have the care coordinator come out to her home because the care coordinator knows what to look for. And she's going to see a lot of things that the doctor isn't going to be able to see. And this care coordinator would write up a plan of care. And then I could say to them, who do you know? Who do you know in Phoenix? Who have you heard is good? And she could, or he could, provide some names for me to start looking at, because otherwise I'm Googling home care in the city of Phoenix. And this person is also our quarterback. So when I have questions, I can call them up and I can ask. And for me as a daughter, this benefit is worth more than the money the policy is going to pay. Survivorship benefit, this applies more to those hybrid products, meaning if you don't need long-term care, your family will get the premium back that you paid into the plan in the form of a death benefit. So we can get, when you're looking at policies, know that they're like puzzles. So the premium that you see first, if you think, oh my goodness, there's no way I could afford that, we can design these any way that you want and get that premium pretty much in something that would be affordable for you. So when you're looking at traditional long-term care, it's the maximum leverage per premium dollar. Okay, so this is going to have the lowest premium because, again, if you don't need it, you don't get anything back. And the premiums more than likely are going to go up at some point. They're also the most flexible when it comes to designing them. We have hybrids. So this is the long-term care policy on a life insurance chassis. And by being on a life insurance chassis, you also can choose how long you want to pay the premiums. With traditional long-term care, I just pay that forever like I do with our health insurance. But with these hybrid products, I could pay it up in 10 years, 20 years, whatever it is that I decide. And it has all these benefits. So if I need long-term care, it'll pay out. If I don't need long-term care, my family gets the money back in the form of a death benefit. And if I decide for whatever to stop paying on the policy, I can get some of my premium back. But you're going to pay for these guarantees. And then lastly, life insurance with a long-term care rider. I like to see these used only if you have a death benefit need. If you don't, then let's look at the policies that are designed to cover long-term care. But if you're younger or you just bought a home and you need life insurance, this is a nice option to consider as well. So it really comes down to what works for you. There is no perfect policy out there, but you have different options. So another question that I ask my advisors is, how are they going to pay for the premium? Are we using cash? Are we just going to write a check? Are we going to maybe reallocate some of our assets and do like a lump sum payment? Are we going to exchange some existing life insurance? Does the client want to use qualified money? So a lot of times, wherever the money is coming from to pay for the policy, that would help decide what would be the best fit for you. So again, what are the considerations? If you're in that car accident today and you need care, what is it that you want to protect against the rise, against those additional expenses? It's a family issue, not so much whether or not you're going to need care. So what about the premiums? And this is important to understand. The longer you wait, the higher the premium is. And also your health is going to deteriorate. So there's no better time than today to put in some type of solution. It'll never be at a lower cost, and it'll never have as many benefits. But again, the older you are, the higher that premium's going to be. Gender, women, we use this policy simply because we live longer. So out of every dollar of claim that's paid out by an insurance company, 70 cents is for a female. So when you look at these policies, our pricing is about 40% more than men because we use the policy. The next factor is the most important, and that's your health. You can't get it when you need it. You have to get it when you're healthy. Remember what it is that makes you eligible to receive benefits from one of these plans. It's either a cognitive issue or the activities of daily living. So we look at those achy backs, those bad knees, your height and your weight. A lot of that is what allows you to be qualified for this plan. And again, once the diagnosis like Parkinson's, MS, if you're already having memory loss, unfortunately, it's too late to be able to purchase one of these plans, and you'll have to look at, another type of scenario. So that's what also makes it so important to consider a plan now, is because we're healthy. And we're healthy until we're not. And then just different ways that you can pay the premium. And this is when working with your financial advisor is so important, because they can find the money to be able to reallocate to put a plan in place that would benefit both you and your family. So with the next steps, what I suggest is, again, making an appointment, talk through this. Talk about what's important to you, what your portfolio looks like, how you're planning to pay for care if you ever need it for an extended period of time, and working with that professional that can offer all these different options, which Joshua's team can. We've worked with them for quite some time, and they've done a fantastic job of putting in place what is best for the client, and also for what is best for the client's family. So with that, I guess we can see if we have any questions. If anybody wants to go ahead and type those in, I'll be happy to answer anything. Let's see, let me check in the chat box. Oh, I don't see anything unless I'm missing it. Okay, well, I'm not, seeing any questions. If by chance I'm missing it, just email back, reach out to Josh's team, and if they can't answer it, they can pull me in, and then I should be able to answer. And if not, I'll find the answer for you. So I hope this was helpful. Again, my whole goal is just to provide the education, the information, so you can make a decision on what fits best for you and your family. And hopefully what happened to my family, by having a plan in place with yours, won't happen to yours. So with that, I have completed my part of the presentation, and I will pass it back over to you.
Well, Susan, thank you so much. That was definitely very informational. Good things to know. And everybody, thank you for joining us today. Please visit stripmatterwealth.com for our calendar of events that will include our webinar schedule, as well as our future classes that we teach at our local colleges. You can also sign up for our weekly market e-newsletter, as well as our monthly retirement e-newsletter. And finally, join us every Saturday at 10 a.m. for our radio show called Ask the Experts. It's on the radio station AM 1190. There we answer your financial questions on a wide assortment of topics. So thanks again, folks. We look forward to seeing you soon.